Today, we'll talk about how to trade structure, liquidity, and the imbalance. We'll talk about everything, different kinds of trading analysis, structure versus liquidity, how to make combo entries. Everybody talks about trading strategies, but nobody talks little secrets of pro traders. Today will be the day you'll learn the small details of trading, which can make you extremely profitable trader. Stop loss positioning, multi-level targets, entry management. We have so much to cover. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. With this video, you'll learn the secrets of successful traders. If you are looking for a structured table of contents, I set it up for you. You can find it on Google Drive or directly from my website, which is in the description. It is important to watch videos in order to fully understand everything. Today, let's talk about what is more important and what to really look for in our trading analysis. In my 10 years of trading and investing journey, I noticed that there are three types of professional traders. The first set of traders develop their skills in market structure. They fully focus on highs and lows, and most of them do not care about smart money concepts like order blocks, liquidity, or imbalances. They only trade the main structure. Then there are some smart money traders who have developed all their skills in identifying liquidity and imbalances. And I have seen that these traders do not care so much about structure at all, because they believe price only moves on between liquidity and imbalances and keep bouncing among them. Most of them think that structure is just an illusion and nothing more. And there is my trading style, which I have developed my skills and achieved high win rates. I combined three things together. I use structure, I use liquidity, and I use imbalances. The combination of these three things gives the ultimate results in trading. However, it does not end here. The question is, do I care more about structure, or do I care more about liquidity and imbalance? My answer is smart money. I care about smart money concepts much more than the market structure. All my trading results prove this. For example, in a strong uptrend, if I can see the great point of interest and untaken pool of liquidity and imbalance against the main structure, I can take that trade. Yes, I can risk the money here. It may or may not work. Who knows? But I'm willing to take such risks here. Okay, recently I've got a question. I cannot find trades with Bitcoin or Ethereum every day. Can I trade altcoins? My answer is partially yes. What does it mean? If you are absolutely sure you cannot see a setup, then you can check the altcoins. Do I do it? I do it rarely. My main focus is always on BTC. Let's see some altcoins. Remember, price action. You can use it as long as you see a clear setup. Notice this break in the 5-minute time frame. A very strong break upwards. After that, the coin gets into an order accumulation range phase for a long time. Check the magnificent equal highs and lows at the top and below. This is an extremely clear trading setup. What happens is here, the market is in a bullish state and accumulates orders for the next move. And the price needs fuel to move, such as liquidity and imbalances. Now, let's take a closer look at this and notice the manipulation and range deviation. Once you confirm a manipulation, you have to ask yourself this question immediately. Is it supported by any other smart money key structure? It could have any kind of demand, such as an imbalance, a balanced price range, an order block, or a breaker block. Anything, even support and resistance flips. You can notice this nice imbalance right at the manipulation. Equal lows hunted and imbalance tapped. What a great fuel for a reaction. But what about the BPR below the imbalance? Do we have guarantees that the price will never pull back to that? Let's talk about it more. Let's talk about two entries. First of all, the target. As you know, no target means no trade. We have already had a perfect equal highs above and also the range high zones. So, we have a clear target without any question. Once price hunts the equal lows and taps the imbalance, you can notice this extreme reaction. Now, as a thinking trader, this is a great entry. There is nothing wrong with this entry. Our stop loss is way below. Why? We cautioned ourselves against a small pullback to this tiny order block and imbalance. Nothing complicated here. Now, what if the price decided for a much bigger manipulation until this BPR and the first MSB was fake? This would be a great loss, a mindful loss. Then you can do your secondary entry from the BPR with the same target because our target is untouched. It stays as it is. Then, what is the result here? 1 hour loss, 3 hour win. Finally, 2 hour gain. So, what is the lesson here? Win or loss has no meaning. We never have an emotional attachment because we trust the statistics and final results. This is the way for pro traders. Now let's talk about the structure and liquidity imbalance comparison. As you already know, I care for all of them. However, liquidity is much more important to me than the structure. Is this the way? Who knows? But this is how I trade. This is my way of trading. Notice the bullish structure here. Price makes higher highs. And with a magnificent strong break, the structure shifts from bullish to bearish. You can consider this as a bearish structure now. However, the price leaves these magnificent equal highs above. Now, we have a conflict here, a dilemma. What to do? It is up to your trading style. I am a smart money trader. Equal lows and highs are extremely important to me. Once the price comes to this imbalance and hunting these internal equal lows here, I will look for a long here. Notice the internal structure shift for the possible entry right here. Then the price pulls back to this nice little imbalance. I would take such a trade here and risk my money here, even if it is against the main structures, because I care for imbalance and liquidity more than the main structure. However, I always try to combine structure, liquidity, and imbalance together for the best results. Will it always work? No, not at all. Sometimes the structure will become so powerful and never hunt any liquidity. Those losses will be conscious losses, managed losses. Remember, you are never a true trader unless you learn to manage your money and make mindful choices. Okay folks, this is it. Very simple yet quite effective price action trading plan. A trading strategy for scalpers and day traders. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.